Welcome back to the deliberations of the Citizens Monetary Policy Committee of CNBC-TV18. I have been speaking with Chairman Pronab and members Samiran, Chakraborty, Soumya, Kanti, Ghosh, Sajjid, Chinoy and Sonal, Varma. Gentlemen and Sonal, thank you very much for waiting on. Samiran, now to certain ambience questions or ecosystem questions. CRR cut. I mean, we were all hoping that at some point we will go back to the pre-COVID CRR, which was raised during COVID. Now that's out of the window completely?
It's slightly more difficult now because not only is the banking system liquidity improved, it's actually the durable liquidity which has also improved substantially. So apart from what we have already discussed about FX intervention and the impact of this 2,000 rupee note withdrawal, we have to also remember that the RBI dividend to the government has been much more than expected. And that does not immediately add to banking system liquidity, but it adds to durable liquidity. So durable liquidity has already moved closer to 90,000 crores from 50,000 crores. And our sense is once we are accounting for these dividend, etc., we'd be seeing a durable liquidity number 1.5 to 2 lakh crores. Now, with that sort of durable liquidity in the system, it's difficult to imagine that RBI will opt for an immediate CRR cut. And clearly, the open question is that this will push back the any sort of open market operations also to a latter date is what our sense is. We have brought down our OMO expectations, but even that looks increasingly difficult unless the liquidity becomes tighter.
Okay, you want to add to that, Soumya? I mean, the market will be watching only what he says about OMO purchases. You think that's out of the window? And anything you wanted to add on rupee management? I mean, my sense is with the yuan depreciating, the RBI is one eye on rupee depreciation as well. Anything you want to add?
No, I think I broadly concur with Samiran's point. I think given the fact that significant improvement in durable liquidity, I think the questions of CRR and OMO now is out of the window. But I would like to add one point over here. I think the central bank, but this may not be within the MPC, but the central bank given the fact in terms of liquidity management, the central bank also needs to think about the foreign exchange part, and that has a direct bit in the liquidity management because Indian rupee, which was perhaps one of the best performing in COVID, has actually depreciated even as other currencies have appreciated in the last 2 months as the dollar has actually weakened. So my sense is that the central bank could actually resort to other intervention strategies like swap transactions, which could bring down liquidity and at the same point of time could lead to some point of appreciation of the rupee. The rupee has appreciated a little bit in the last couple of days, and there is already 12 billion outstanding forwards in the 3 to 12 month breakup of the RBI. So maybe that could be an option that you kill two birds with one stone. You reduce liquidity by doing maybe a sell by swap and allow the exchange rate to appreciate a little bit, because that will also be good for in terms of capital inflows.
Okay.
So,
got that. So your expectation is let them intervene, but intervene without increasing liquidity too much through the forward market. Okay, time permitting, I'll come back to that. But Sajjid, you know, if it is going to be good growth and low inflation, chances are the Reserve Bank will pause. I mean, the growth anyway doesn't need a cut. Now, how do you communicate a long pause? You can't keep on with this withdrawal of liquidity for too long. So how will they communicate that we are on pause mode for a goodish bit?
Lata, this is a good problem to have. After a difficult 2022,
yeah, of course.
The RBI finally finds itself in a bit of a sweet spot. As you said, growth is higher than was projected. And at least in the next 6 months, headline CPI is going to be 60 to 70 basis points below their existing trajectory. But we need to be careful. There is no room for complacency here. I know there'll be a clamor among markets to say, why not change the stance to neutral? The issue I have with that is, if you look at where monetary conditions are in the last 2 months, so since the April policy review, US 10-year yields have actually gone up by 30 basis points. But Indian yields, whether it's the 5-year OIS, 5-year bond yields, 10-year bond yields, are actually down between 25 and 30 basis points, right? So what you find is any measure of real monetary conditions is already much easier today, despite the rate hikes, than we were in the pre-COVID level, And we need to be careful here that monetary conditions don't ease too prematurely. So if the RBI were to signal at this point that the stance is going to move to neutral, unfortunately, markets will jump the gun, presume that rate cut is coming soon, and financial conditions will ease further. We already spoke about the fact that core liquidity, the surplus, has almost doubled from the start of the fiscal year to today. So we need to be a little bit more vigilant because there are multiple uncertainties that we still confront. It's been a good 2 months, but Sonal spoke about the risk of El Nino. Core inflation has just begun to come off the last 2 months. We need to make sure that it endures. We know goods inflation should come off, but services inflation is the dog that hasn't barked. And could you get, some services inflation down the road? And we don't know what the Fed's going to do. So given this plethora of uncertainties, I would say the RBI should at this point stay the course, not prematurely change the stance to neutral. Of course, the communication, as the RBI has been good at, can be more nuanced. It doesn't have to be nearly as hawkish as April. And the idea should be we're on a prolonged pause, but not create any expectations of a rate cut anytime soon, because otherwise monetary conditions will ease to the point that you're undermining the hard work of the last year.
Would you agree, Dr. Sen? Because, global commodity prices are falling and, people are actually revising down even domestic inflation. So why not call a neutral? Why not signal that we are done with the hawkish phase?
Lata, if you recall our last couple of meetings, Sajjid and I have been daggers drawn on just this one particular issue.
Okay. Yeah,
Sajjid has refused to let RBI go neutral, and I've been insisting that they should. So this is a debate that just continues.
Okay, fair enough. We will know. We'll know soon when the vote happens. But let me toss that now to the third person, Sonal Varma. Sonal Varma, you're very clear that there is going to be a downward revision of the inflation trajectory. So are you expecting a cut? And do you think RBI should signal that by changing its stance right away in June?
Yeah, Lata, so let's split this up. I think, first of all, here and now, we are in a sweet spot, but inflation is not yet close to 4. So I think to be changing the stance and signaling anything right now would be premature. And therefore, I think keeping the course on withdrawal of accommodation is fine to signal that it's a pause, not a pivot.
Fair enough. That's well defended. But now you have to take your pens and vote, or actually push your buttons and vote. The first question, obviously, to my members is, will the MPC hike, cut, or pause on June 8th? Samiran, I start with you. What will they do?
I think it's a pause.
Pause. Soumya?
It's a pause.
Okay. That's 2 votes. Sajjid?
I think it's a pause.
Pause. Sonal?
Pause.
Pause. Okay. Chairman, 4 pauses. What about you, sir?
Pause. 5 pauses.
Okay. All right. The chair pauses. So that's a 5-0 in favor of a pause. That will be a relief for the market. Stance will be more important. Current stance. Will MPC retain stance at withdrawal of accommodation or change? So, Samiran.
A marginal call, but I will probably side with retain.
Retain this. Okay. Unchanged stance.
Stance will be unchanged.
Unchanged stance. Okay. Sajjid?
A retain stance, though you can soften the language a bit, but retain the stance.
Okay. Retain stance. Sonal?
Retain stance.
Yeah. You argued that very strongly. Dr. Sen?
Well, I would argue they should change. So I would have said neutral, but I suspect what they will actually do is retain the stance.
Oh, okay. So we'll go with neutral since that's your vote. And you've been holding that from the time of the last cut, of the last hike. Yes. The final question, and I want to squeeze this in. When do you see the first rate cut, Samiran? Because the market is looking for one.
Well, our sense is it's still somewhat down the line, not immediate, and it will obviously be extremely data dependent, not just domestic data, but as well as global data.
So I'll put it as data dependent.
I think it's far away. It's completely data dependent. So not as of now.
Okay, so not as of now. Sajjid?
Again, very data dependent, not as of now, but based on baseline, nothing before the end of this year, December at the earliest, but very data dependent.
December. Oh, that's important. December. Sonal?
Earlier than expected. I think the growth, as I argued, will disappoint. So we think it'll be October.
October. Oh, good. Market will be very happy with you. Dr. Sen?
Well, data dependent, obviously, but I don't think from what indications we have, it's going to be within this calendar year, which means I'm more or less with Sajjid.
Okay. Thank you very much, members of the Monetary Policy Committee. It's a pause. The stance more likely will be not changed, but we will look for any suggestions of whether the governor hints about a cut. Thank you very much for watching this very special show.